October 26th order. Turn it over to Sonia. You want to, or Bart, who wants to open it up? We got our auditors here from Brown Edwards to go over our financial reports. So.
I was going to say, I can turn over to Julie and Chris and just let them go right in if they...
That's quite fine with us. Is this on? Can you hear me?
Yes.
All right. I usually don't need a microphone anyway, so. Well, thanks for having us. Is everything okay with us sitting over here?
Yeah.
Okay. Yeah, it's a little longer than the public one. So, thanks for having us. I'm Chris Banta. I'm the partner from Brown Edwards. Been on your job, on your engagement for about, 6 or so years. This is Julie Moore. She actually runs the job, does all the dirty work, I guess you would say. But we are here today to go over the audit. We're going to go over it at a pretty high level, but ask questions. We love this stuff. We're happy to talk about it as much as you want tonight, or tomorrow, or any other time after tonight. So just keep that in mind, and you should have our contact information should you have any questions after tonight. So. Just want to thank Sonia and Susan, too, for their hard work. This is a long process. We get started probably about mid-April, reaching out to our clients, coordinating work, starting to talk about, what are the new risks at the town of Bedford, what kind of federal funding do they have, and one of the biggest things was just, year 2 of COVID now. What's going on in the town? How has that impacted them? But it's a long process. I mean, we're talking 6 months, 6.5 months from start to finish. And it culminates tonight when we go over the audit and, like I said, ask any questions that you may have. But once again, as I mentioned, biggest picture, big thing going on for the town, just like all of our local governments, is when we sat down to plan our audits this year, the first thing, the number one thing we talked about was just, okay, we're in year 2 of COVID. What does that mean? And for most local governments, some things change for school divisions. There's some drastic changes there. Parks and Rec departments experienced a significant amount of impacts there. But the biggest thing was federal funding. What kind of money did you get from the county? How much CARES Act money did you get last year or this year? How did you spend that? What kind of funding did you get through the ARPA funds? And just what are your plans with that money? So that was the biggest thing, just understanding how that impacted you. Luckily, there are not a significant amount of detrimental type impacts. Some of our clients were impacted where they're completely remote still, 18 months later. Some of our clients were significantly disrupted from a process or procedural standpoint where they've gone completely remote, had to totally redesign their internal control structure. Those are the type of things that we as auditors, we start hearing that, our senses start going all saying, we got some new risks. There's some things we need to look at. But not a significant amount of those here at the town, but we will talk a little bit as I go through these. Some of the fluctuations, some of the balances that specifically relate to the impacts of COVID. So what we're going to do, Julie might hold up we're going to go through all the financial reports. She's not going to hold up every page. I joked that she was going to do that up there. But so if you could grab the largest bound document you have in front of you called the Comprehensive Annual Financial Report. We're going to go through this at a pretty high level, because it is 150 pages long. But if you could turn to numerical page 1, and of course that's about 25 pages in, you'll see a letter on Brown Edwards letterhead. So, and if you turn to the second page of that, the primary focus that we're engaged as auditors is to give you an opinion on your financial statements. That's the financials you see here, as well as the 75, 80 pages of notes that that's the primary purpose. We're here to evaluate your financials, substantiate the balances and all of your different statements, look at your notes, make sure that they are prepared in accordance with standards. And the primary thing you want to hear from me tonight is the opinion on your financial statements. And if you see at the top of page 2, there's a section called Opinions. And the first sentence reads, in our opinion, the financial statements referred to above present fairly in all material respects. That's the highest level of assurance that we as auditors can give to a set of audited financial statements. So I want to commend your team. One common misconception that I always like to speak to is the fact that that's always a given, because you can always get to a clean opinion. That's not accurate. I issued an audit about 3 or 4 weeks ago that was modified, qualified, disclaimers. I mean, it was a mess. So it's not always a given that you're going to get to that clean opinion. So commend your team on that. We do expect that we're going to be able to get there just from our past experience of the town, but we always start with a clean slate, and we know that it's not always a given. So commend your team on a clean opinion. One thing I will mention, there was a new accounting standard this year, GASB 84. I won't go into that in much detail because it did not impact the town at all. But if there were some impacts to that, some restatements because of that, we would have had to address that in this, as we did in the years where we implemented the pension standard and things of that nature. But no new standards. So what you see in your financials, other than some new disclosures and some new report we'll talk about, they should all be pretty consistent presentation as you've seen in past years. Just because many of you may not look at a lot of these during the year, I'd like to refamiliarize yourself with the document itself. If you turn to page 4, starting on page 4 and going for about 10 or so pages is the management's discussion and analysis. For non-accountants or those who like a high-level, discussion about what follows and following 150 pages of financial report, this discussion and analysis is a good high-level discussion about financial trends, current year, prior year analysis, other things, economic outlook, things that you're looking for in the future, budget fluctuations, things of that nature. It's where you see a summary of the financials themselves in a narrative form. And if you turn to page 6, which is Exhibit 1, what we have here in Exhibit 1 on page 6 of your statement of net position, this is basically the balance sheet for the town as a whole. This includes all the funds, all of your operations, but it is a snapshot as of June 30, 2021. Like I said, most of the balances and line items are pretty consistent with last year. I will point out some fluctuations that if you were to hold this up to last year, you should notice. One thing is your pension liability. It went up about $1.6 million from last year. That is totally related to the fact that the investment performance for the funds that are invested by the Virginia Retirement System did not perform in line with the increases in the liability. So things such as mortality rate, census data of the town employees, that information was taken by an actuary. It resulted in an increase in your liability. And then on the flip side, you would hope to see a similar increase in your investment performance, but during 2020, the market did not perform well. So I think what we see here are the impacts of the first year of COVID flowing through your pension liability, where the markets were in turmoil for a little while, and the investment performance underlying the pension did not perform as well. So a $1.6 million increase there. Your other post-employment benefits liability, which are other Virginia retirement system related liabilities, as well as a local OPEB here, that liability is about $512,000. Not nearly as significant as the $9 million pension liability, but it is a long-term liability related to benefits provided to your employees. Those are not new balances. However, there is one balance that is not necessarily new, but definitely larger. You'll see an unearned revenue amount of $3.4 million on this statement under your governmental activities column. That is all COVID and ARPA money that was received by the town but not spent by June 30. So when you received a lot of that funding from the federal government up front and did not spend it by June 30, we have to show that as a liability, essentially kind of back to the federal government as of June 30th, and then that will go down as you spend the money and recognize it as revenue going into 2022. Just another reminder, because we only are about 3 or so years in, there are component units for the town. If you go back 5 or 6 years, there were no component units. Those component units are your Economic Development Authority and the Housing Authority. The numbers are, these are pretty new still. They're only a couple of years old, so the balances are pretty small still, and the activity is pretty low. But just a reminder of what's in that component unit column. Any questions on Exhibit 1? If you flip to the next page, which is Exhibit 2, this is basically your income statement for the town as a whole. Includes all of your activities, all of your funds, all aggregated into an income statement. And just a reminder on how this statement works. The primary focus of a local government is just how much does it cost us to operate and serve our citizens and provide the services we need to do. So of course, the starting point on the left of this statement are expenses. So therefore, the purposes is to show you how much it cost us to run the town and serve our citizens this year. And then the follow-up question to that is, okay, this is how much it cost us. Well, how do we pay for that? And so then you work your way from left to right, showing how much do we charge our citizens for, water, sewer, or I'm sorry, electric or solid waste. How much do we receive in grant funding? And then you come up with a net negative amount, because usually local governments operate from that standpoint at a loss. And how do you make up for that loss? Is through charging taxes. So you work your way down the table from the large negative and show how you make up that funding, that negative $7 million for your general government. You made it up with property taxes, sales taxes, things of that nature. And down at the bottom, you'll see a line called change in net position, and you'll see that's positive for your general government activities and all of your business type activities together. So we'll talk about the individual business type activities as I get back to that statement. Any questions? What we're going to do is flip a couple more pages. What you have for the next couple pages are your fund statements for your governmental funds. If we had, it's just your statements for your general fund. If you look at Exhibit 7, this is what I like to focus on as part of analyzing and evaluating your general fund for the year. Exhibit 7 is a budget to actual statement. You adopt the budget, you legally adopt the budget. That's extremely important for governance purposes. How much do we expect it to cost us, the town, to serve our citizens? We are required to report a budget to actual statement that shows here's what you budgeted, here's how much the actual costs were. And if you look at the total expenditure line, you'll see that total expenditures ended up being under your final budgeted amount by about $871,000 this year. So no budget violations to report there. If that was over, if your general fund was overspent, that would be a legal violation that we would have to report as a finding in this report. If you flip to Exhibit 9, previous statement was a focus on your general government activities. Exhibit 9 is your income statement for your business type activities, your solid waste fund and your electric fund. Just a few things that I'll point out. Your solid waste fund did operate as in a loss position. That's not unusual compared to past years. Of course, your electric, on the flip side, did operate with operating income for the year. Those are similar analytics and similar trends that we've seen going back many years at the town.
So, quick question on that. I kind of talked to you Paul about this on the landfill closure. So that $542,000 number, that was basically closing the active landfill just this year. I mean, we're not going to see a number on a recurring basis of $542,000.
Unless something goes really wrong at your landfill. Now, I can't do a prospective evaluation of your landfill. That's an engineer's. We rely on engineers to do that. So unless something goes significantly wrong, you shouldn't see that. Now, one thing I will point out is that this is the accounting basis. So on the next statement, you'll see $2+ million spent to suppliers for the solid waste fund. A significant amount of that is closing that landfill this year. But one thing about the difference between Exhibit 10 and 9 is 10 shows where you paid it. 9 captures incremental changes in the engineering estimates of the ultimate cost. And so a lot of the cash that went out the door this year was recognized as expense over time. As you filled that active landfill over time, the more you filled it, the more you incurred an expense in the long run that the engineer estimated it would cost to close it. And so when you finally closed it, you reduced your liability this year, and so you see a large cash outflow, but the expense is only $500,000 from an accounting standpoint.
So would it be fair to say on the operating income loss of negative 656, if we back out that 542 number is that kind of what we're running as a shortfall between revenues and normal expenses, and I mean, we made a change mid-year to, try to increase our revenue.
Yeah.
As we try to move towards getting this fund a little closer to self-sustaining, don't know if that's gonna happen. But
Well, that should always be a goal for a proprietary fund. They're supposed to be self-sufficient. Now, one thing I would probably suggest you back out, not just that entire landfill closure amount, but also depreciation. Depreciation is a non-cash item.
Right,
So you back those out. Now, I think it might be a little bit of a fallacy to back out all of that $500,000 because you're going to have some costs to manage a closed landfill. You're going to have some costs. So I think that would be zero. It's probably not totally accurate, but to back out some of that and then your depreciation kind of gets you to close to a almost cash basis. You're probably close to a break even in some ways.
Okay.
But
yeah, because I'm sure that 542 includes the old landfill monitoring costs in there.
that's on the general fund, isn't it?
We moved all of those expenses into solid.
Oh, you did? Okay.
Yeah.
Okay.
Budget year.
Okay.
But we wanted a true cost of what solid waste cost us,
Mhm.
so we moved any expense that had to do with any landfill into the solid waste.
Okay.
But that's solid, that whatever that number was, 542. Getting simple, but it was a restricted fund for that thing to last for 20 years for those expenses, those recurring expenses.
Is that the 20-year? I'd have to look at the engineering report to know what their run out of what the old liability would be. But 20 years sounds about right. And I know your old landfill is kind of like an ongoing 8-year, knock off 1 year, add another year. They're like it's 8 years, but really it's is it ever going to end type thing. So.
Okay. So it's not quite as bad as that 656 kind of looks.
Yeah.
Going forward, I mean, maybe
Going forward, you'll be okay.
Mhm. Well, one thing I like to do a lot of times is when I get a question like that from governance to say, well, let's look at the cash flow statement because hypothetically what we just did, we said, oh, well, maybe you had an operating cash flow for the year, but because you had that large payment to close and reduce the liability, your operating cash flow, it's $2 million to the negative. So another exercise you could do is look on Exhibit 10, look at your payment to suppliers and back out what you paid on that when closing the landfill. And that would probably get you back closer to break even possibly. So those are two kind of proofs you could do. Not purely scientific, but pretty an estimate probably. Any other questions on business side activity funds? Starting on page 17 and going for, I think, like I mentioned, 40 or so, if not more, 50 pages, are your notes to your financial statements. For the most part, not a lot of new activity. We'll point to a few notes that I think warrant some just revisit how important they are. Note 7, this is a roll forward of your capital asset activity. Your business side activities are very capital intensive. It's always good to look and see at the age of your assets, and we'll talk about some statistics related to that later on. But that's what Note 7 is. Note 8, this is a roll forward of your long-term liabilities. One thing you can look at here feeds directly into all of our conversations just a few minutes ago. Under business side activities, you can see at the bottom your active landfill. You can see that you paid that liability down when you closed it by about $2.2 million. So, not scientific, not specific, but you can take that $2.2 million, back it out of that operating cash flow deficit on your cash flow statement, and you're going to come pretty close to about $100,000 or something like that of operating cash income.
How do you figure depreciation on the building?
Depreciation on the building is probably, it's probably in the general fund, I would assume. So the general fund probably funded that years ago. You mean this building, for instance?
For example.
Okay, so this building, it's on the general fund's statements and entity-wide statements, and I probably say that's 40 years. I don't know if I have sometimes 50. So,
Okay.
yeah.
It's a big asset.
That's what question for later.
Mhm.
Thank you.
If you go to note 11, page 39, what we have here on the bottom of page 39 is a roll forward of your pension liability. Just kind of reiterate what I discussed before. You'll see your pension liability as a whole increased $1.2 million, but your investments showed a $400,000 loss for the year. So And that's not just, it's not total loss. Some of that is an excess of benefit payments coming out of your investment pool compared to investment gains. But we saw for a number of years, investment gains were doing really, really well. And so you saw those liabilities trending down in the COVID year, because this is lagged 1 year. The investment portfolio is lagged 1 year. In that COVID year, we saw where the investments performed very poorly. So the liabilities are pretty much going up across the board. So. And then page 57, note 23. Not a lot of significant information here in note 23, but we are required, and we feel it's important to let a user of these financial statements know that COVID is still a thing. Everyone reading these financials should be aware that there's a pandemic going on, but it is inherent in every set of financials. The impacts are totally unknown from a long term and a short term and a prospective term going into next year. We don't know what the impacts will be, but we do discuss CARES Act funds that were received. We discussed the ARPA funds that were also received, and discuss also that the CARES Act funding did come through the Bedford County to the town. So just like to point that out, that's in pretty much every set of financial statements that was issued over the last 18 months or so. Any questions?
1,110,000, did we pretty much spend all that, or is that the number we actually spent out of our CARES money?
Those are reimbursable costs, so we were reimbursed that amount.
Okay, so they're basically an offset there.
Yeah. So the Bedford County got all that money up front, and so then they would pass the funding to the town as the town spent it on eligible expenditures. Now, unlike ARPA, the ARPA funding, which was all paid up front to the town, and that did not pass through the county of Bedford, right? So, and that's why it shows that big liability for that $3.4 million, because none of that was spent by the end of the year.
And those 1.1 million expenses are just spread out kind of department basis. They're not kind of broken out as, they're just spread.
I'd say a bunch of it's in probably public safety.
Yeah, it's for PPE,
Yeah.
it's for the different things that we did.
Hazard pay
The
and-
HVAC system, so that went into the department that it was the expense on.
Okay.
Well, business reimbursements, all that.
Yeah.
Those were the community development area. So
Any other note or questions on the notes?
If we don't get the other 3.4 till next year,
I believe it's supposed to come in February sometime, but we will have to submit a report of how we spent the first 3.4 in the next couple of months. So
getting offset, but do we have to spend it or just plan it?
plan how we strategically going to spend it.
I'll just walk you through the financials again as well. Starting on page, after the notes, about 2 pages after the notes, there's a section called Required Supplementary Information. Not going to go through this in detail, but this is 5 to 6 year trend information on your pension liabilities. Really just, and if you want to see the investment fluctuations, you can see them there over the last 5 or 6 years. But just want to refresh your memory on what that is. It's just trend information. Ultimately, that will have 10 years of pension and other post-retirement benefit liability information. Following that, on page 67, this is other supplementary information. It's not required, but it is other supplementary information, which is a combining statement of your 2 component units we talked about before, your housing development, your housing authority, and your economic development authority. It just shows the activity there. As I mentioned, there's not a lot of activity there, but it is separate sets of funds and entities that we audit as part of this audit.
Let me ask you one question on the Economic Development Authority. So I know we give them roughly $125,000 a year. They have cash accounts. And this balance sheet here is not showing anything in cash, and it's showing something called a bank overdraft.
That just means that there were more checks outstanding at the end of the year than it was in the bank. It's because this is a snapshot as of that day, June 30th. So I think that's that's probably what's going on there. There were some checks outstanding that were in excess of the cash balance. So
Checks of $277,
that's what the bank reconciliation had. We'd have to, pull that out if you had any questions about what was in there, but,
So that was June. Is that anything related to the middle?
that wouldn't be the EDA. Well, it could.
Yeah, that would have been the
Yeah,
EDA.
it
that-
would have been the EDA.
So those accounts, they have their own restricted bank account, and we do a transfer at the end of the year into general fund to cover the expenses that we spent out of the general fund.
So it's not a true bank overdraft.
So, no, it isn't. At the end of the fiscal year, I just had it transferred from the restricted fund into the general fund to cover the amount. So basically, the general fund was floating those expenses until I had a chance to physically go to the bank and transfer the money from one account to the other.
most of the time when you see that bank overdraft, that doesn't mean that we got your bank statement and it showed negative $277,000.
No, I didn't figure
Most of the
it
time,
did,
most of the time there's a zero balance or a very nominal amount of cash in there, and there's outstanding checks that are going to be funded right after year end. So, but that the accounting term is bank overdraft liability. So, any other questions on those?
Yeah, real quick question. Do these folks audit the EDA?
Yeah, we do have a single audit for the EPA.
Okay.
Yeah. It's one of our, so when we do your audit, each, we call them opinion units. So if we go to do an audit of a contractor, we're only auditing the contractor by itself. At a local government, each of your funds is audited by itself. And it has a separate set of, the EDA, maybe our scope for looking at checks is $500. But then the general fund, our scope for looking at checks might be 10 grand. So those are just, so in each of your funds at a government, that's why if you look at our opinion on the financial statements, it's opinions, because we're giving you an opinion on each of your financial statements separately.
I remember, I don't know, several years ago, when we first started talking about breaking out the EDA and the Housing and Development Authority, there was some mention about the fact that there might be a need to be transparent on what the grants were from a note standpoint or anything. I know we haven't done that. Is that something that is not required, or is it got to be material, or how do you figure that?
So when it comes to economic development authorities and entities like that, the biggest thing is localities make promises to businesses to say, hey, we'll promise you $1 million in tax savings or $1 million grant if you bring X amount of jobs, generate X amount of tax revenue. If you make those kind of commitments and they're significant, we would disclose those as outstanding, and then we probably would include a footnote that wouldn't have the detail. It wouldn't have the detail of the businesses unless it was some outrageously large amount. But it usually, that disclosure would say the town awarded X amount of incentives, and there are still X amount outstanding that have not been earned yet. But it has to be significant in relation to the financials.
Right.
So. Going to page 71 and going for about another 20 pages or so is the statistical section. I don't go through this in detail, but this is a 10-year trend analysis of financial and operational statistics. So you'll see about 20 pages or 10 pages of just basically your financial statements showing the last 10 years how they fluctuated. You'll see debt balances presented over 10 years, and then as you get into the back, you'll start to see things like operational statistics, like capital assets, employees, things of that nature, and you'll see a bunch of things that are non-financial in nature. But just further things that if someone's looking to say, what's the story of the town for the last 10 years that led up to the financials, this just provides more information. That is the financial statements and the notes, which, of course, as I mentioned, is the primary focus of our audit. The second part of our audit is what we call our Yellow Book or Government Auditing Standards Audit Report, which is on page 89, also on Brown Evans letterhead. It's in this document still, haven't moved on yet. As a government entity, we have to look at your internal controls and your policies and your procedures, and we have to not only look at, how are they operating, we have to look at how they're designed, make sure that they appear to have been designed effectively to prevent fraud and error in the financial statements. If we find what we call significant deficiencies or material weaknesses in those controls, we would have to report those on page 89 in the internal controls section there. Happy to say we did not have any material weaknesses to report. That is not that common. A number of our clients, I'd probably say half of our government clients, have some sort of weakness, and a lot of times that's an inherent weakness because they can't afford to staff up, and so they have a segregation of duties issue. I think if you went back a decade or so, you'd probably see some comments in this report on your town, on the town as well. On the second page of that report, page 90, there's a section called compliance, because the Auditor of Public Accounts of Virginia gives us about a 100-page compliance supplement with a number of different things that we have to go through. Some of it's looking at your conflict of interest disclosure statements. We have to look at those. Some of it's financial tests, some of it's non-financial. If we have findings while going through that document and doing those tests, we have to report those here. And I'm sure in past years you probably had something here, but no findings this year related to that compliance. So,
Thank you, Devin.
and then something that's new. We like talking about new things, not just the same old stuff. Because you received over $1 million, and not just received, but spent over $1 million of the CRF funding from the county, we had to perform a new audit this year, what we call a uniform guidance single audit. And I'm not sure if we've ever done this for the town. We do it for most of our local governments, but you have to spend over $750,000 of federal funds before we have to do this. Well, this year you spent over $1 million. The purpose of this audit is hyper-focused just on that federal grant. So we look at your largest federal grant, which this year for you would be the CRF CARES Act money. As part of that, we do test your processes, your procedures on how you spent that money. We look at things such as reporting. If you had to send special reports to the county or the state or even the federal government, we look at that. We look at the controls, and then we pick a large transaction sample, something like 25 or more transactions that were charged to that grant for the year, and we test that for compliance. So happy to say that there were no findings here, so you have a clean audit opinion from a federal compliance standpoint. And because of this also, your document, this whole document, will be uploaded to what they call the Federal Audit Clearinghouse this year. Anytime you don't have a single audit, it doesn't go to that. But because you have a single audit this year, it's going to be uploaded to a federal database. So your audits are available on your website, but they'll now be available for anyone to pull up on the Federal Audit Clearinghouse if they're interested. And then the last two items I'll point to here in this document, page 94 is a schedule of findings and question costs. If you want to skip everything I just talked about and just say, like, how do we do, this is pretty much a summary. This is kind of like what I call the report card for the audit. This, likewise, is something that's not in audits that don't have a single audit. So when you have a single audit, we're required to use this because it mirrors what's going to go to the federal clearinghouse. But it really hits every single item I just spoke about going through this, all the different results. And then last but not least, in the financial statements themselves, there's a new schedule, the schedule of expenditures of federal awards, and that's where you'll see you have $1.124 million of federal expenditures, couple $1,000s here and there for other things that pass through Virginia, but the largest is the $1.1 million of CRF COVID funding, and that's the program we tested. Any questions on the financials? Have a couple other documents we'll go through. If you please pull up a bound Brown Edwards document. I think it's the only document that Brown Edwards has pulled up. It says comments on internal control and other suggestions. So I mentioned that if we have what we call material findings related to control, they would be in your audit that we just spoke about. At times we may have things that are not as severe, they're not material weaknesses, they're not significant deficiencies, they could just be control suggestions. They are what make it into this report. This year, we do have a couple items related to inventory. I think we had some, when we do an inventory observation at the end of the year, I think we saw a number of deviations and just test counts when we did them, that the test counts that were done before we got there were not accurate. It did rise to the level of being a material item. I think actually going back over the years, there might have been a significant finding about this, but it is procedures, just need to work on the procedures, make sure that counting is accurate. So when we come out and do our test counts, there's no differences there.
So would you have any recommendations on how we, because I think this hasn't been on there for a couple of years at least.
So,
any recommendations that we can implement?
yeah, I mean, it's probably someone, if you're doing test counts, have someone else do a spot check behind the people doing the test counts.
Like, I'm pretty sure that one of the items that was miscounted was transformers. And they're pretty big, and I feel like anybody could like count those, yet they were miscounted. When we asked why, they just said, well, we just miscounted. And it was more this year than last year. So I feel like that problem probably needs to get resolved before it rises to like a significant deficiency.
Because if it got to the point where we found, I mean, this was a few of our test counts were like that. And so that's why it's a comp. But if it got to the point where we're looking and the entire thing is off, or we're finding that the numbers didn't change from last year, meaning no one counted it, no one's updating that. So yeah, it just emphasized the importance of keeping track of that. It's pretty rare someone's going to walk off with a transformer, but at the same time, those are bigger dollar items, so that could have
Material effect on
material. So,
What is that referring to? What is it? Is it identifying who, what, and where, or just?
No,
The specifics on the transformer?
Yep.
I didn't see it.
no, there's no specifics. Inventory counting.
Well, that's for example, we had that issue years ago. We've got an inventory clerk, so I wonder why that's still happening.
I think the biggest thing is, one of the things too, is tone at the top. Just make sure that those clerks understand that it's not just a routine process they're doing. It's important because you got to get your financials right, but making sure those are right, and also making sure that you have a good handle on how much you actually have on hand in case there's an emergency. You don't want to say your system say you had 10, you go out there, there's none, and then you're in a problem. You can't do things for your citizens, and also detect and prevent fraud. So I mean, if folks are walking off with copper wire or things of that nature, that a transformer is going to walk off of that probably. But there's other things that could walk off, and accurate test counts and people understanding the importance of those test counts is important. So.
Or you overstock when you really didn't need to.
You have that too, where there's bad test counts, and you say, oh, it looks like we have none. It turns out you have a truckload of them, and then you're spending taxpayers' money load up, and then you risk not ever using that if technology changes and it was a waste. I mean, there's all different angles you can take on that. The big thing is get it right, have someone do a test count behind them, and make sure you're dealing with that throughout the year.
So did you guys actually do the count?
We did we come out at year end and do like a test count. I think we may look at 20 items.
How many were off on the transformers, do you recall?
I couldn't tell you. Let me get my computer and I'll pull it up.
She can look at that while I'm talking, but yeah, it's I mean, if it was a significant problem,
You didn't notice anything significant?
yeah, if it was big enough where it projected to a big dollar issue, so. I'll let Julie kind of look at that, and I'll kind of just talk a little bit more about this letter. Pages 4 through 14, this is just some light reading about some upcoming GASB standards. One of the biggest is going to be this year related to leases. We're going to work with management this year and just look at what leases you have, if any, because there's some new accounting rules with that. Identifying them and just making sure we capture all of them and figuring out if they're even material. That's going to be the biggest challenge with this. I don't anticipate it being a huge deal for the town, but we have some clients where this could be a significant matter. Starting on page 15 and going for another 12 to 13 pages, is the governance communication from the auditor. So I spoke about the results. We talked about clean audit, talked about the findings, significant findings. We talked about the control matters. This letter is a communication from me to you, just letting you know that, yeah, you got a clean opinion, but were there any circumstances you need to know that could have occurred to get to a clean opinion? Because sometimes we can go to a client and what they give us is unauditable. It's a mess. And so we have to start adjusting the statements. We have to start having consultations. We might have disagreements with management. Sometimes management might want to get a second opinion. It could be a chore to get to that clean opinion. And a lot of times we can get there. But if there are a lot of issues in the performance of the audit, we have to let you know. Just, hey, this is the amount of restatements or adjustments we had to do. These are the disagreements we had with management. These are the difficulties, things like that. We're just required to let you know that. Nothing really significant in here. We had a couple of immaterial items that we passed on. They're not very significant, and actually I think one of them is just a reversal of an item from last year. One of them is just related to the fact that you do participate in the Virginia Local Disability Program, and that liability is so small that it would add 15 pages to your financials. It would notes and all for I think it's like a $8,000 liability or something like that. So it's almost like so we just let you know that we deem that pretty immaterial. Management agreed, and we're just letting you know what we passed on from that standpoint. And then the last part of this letter is a copy of the management representation letter. On November 2nd, when we said, hey, we are done this audit, we provide this letter to management. We date it, they print it out on the town's letterhead, and it's a laundry list of representations they're making to us, letting us know that they're not aware of any fraud, any litigation has been disclosed to us for us to consider for disclosure. They've been truthful, they've given us all copies of minutes, they agree with any adjustments made, things of that nature. You will notice if you compare this letter to last year that it is about, it's about 3 pages longer than past years, and that's because we performed that federal audit. When you perform a federal audit, there's about 30 more representations that we require from management related to specifically to the federal audit. So we provide that to you so you can see what management is representing on the town's behalf. So, did you have a...
Yeah, so it was one transformer, and they said there was 15, we said 16, and then there were 3 other items that was miscounted.
So. And so that's out of a sample of 20 or so. So 3 out of 20 to us, and the number, we like to see none. So we always want to emphasize, likewise, that's why it didn't rise to material item. So. Any questions on the letters? All right. The last document I'll talk about is financial analysis, which is, I think that's probably a town hall. As I've mentioned in past years, this is a good, it's a byproduct of the audit that it's not required. It's something we do. A number of our government clients do appreciate some of the graphical presentation here. I'll touch base on a few of these. They are based on the audited numbers. It does give some analysis over about a 5-year period. If you look at page 2, this is your level of unrestricted net position for your general government services. You'll see going back 2000 to 2015, I think this flipped from a positive to a negative, and that's when we had to start putting the pension liability on your books. And so that drove that unrestricted part of your net equity for the government to a big negative. One thing I do like to point out is the fact that you'll see for 2021, you continue to have a negative, but if we were to back out pension from your negative $886,000 of negative net position, it would actually end up being a positive $3.4 million of net position for the general government. So I think that's a good analysis to do because those liabilities are so long-term in nature and they're not capital related. So it's really hard to really look at that and be like, how strong are we financially? And to see that number with those backed out, that's a good thing. The worst thing is if you back those out and it's still negative, which I've seen before too. So.
I mean, so these are pretty wild swings every year, it seems like. Is there anything that you can explain maybe to us what is kind of causing those, well, is it all pension liability, or is it?
It's going to be a number of things, because this ratio is a percentage, it's your net equity, your net unrestricted equity in your governmental activities as a percentage of revenues. So in years where, you know, the liability, your net equity, your net negative equity may have gone down a bunch this year, and that's probably because your government activities had positive increase in net position, so that reduced your negative. But on the other side, you had some large new revenues. Also, something like the COVID funding, that's governmental revenue. So it's going to, you have to look at every different piece. So the net position can fluctuate wildly based on, a lot of times it's based on pension results. And then of course revenue, that can fluctuate based on COVID grants or sales tax and things like that. So.
Well, that pension thing hit us a couple of years ago. That really skews the numbers.
It does. It does. And the thing I can say is that every local government in the entire country is this, except for jails. Jails all seem to have an asset, a pension asset, because no one works at a jail more than a year. So they forfeit all their pension stuff. It creates like a big, like all our jails clients have like big pension assets because everyone's like, I'm out of here, and they leave all their money and then they have an asset. So,
a lot of Roman doors.
yeah, so. And then they don't go to another jail because then it wouldn't stay there. So it's obviously not following them. So, but we do appreciate the work. So page 3 is an analysis of your budgetary fund balance in your general fund. I like to look at this really, especially the months in general fund, unassigned fund balance. You saw that ratio on the previous page go way down. I think you're seeing that over here with the general fund. You're seeing almost 6 months of expenditures in fund balance at year end. So just to put it in perspective, obviously that's one of the higher levels of fund balance you've had for this ratio. But a lot of our other towns have about anywhere from 2 to 5 months, 2 to 7 months of expenditures in fund balance. So usually you were on, last couple of years you were kind of lower, on the lower end, some of our clients, their general funds. This year, you're kind of on the higher end. A lot of this is purely based on a snapshot at June 30, too. So it's, you know, on July 1st, it could be drastically different. You know, it all depends on just how things fluctuate, you know, at that point in time. So. Page 5 and 6 are what we call current ratios. Really what this does is shows that of your assets that you have that will pretty much turn into cash and be spendable in the short term, do you have enough to meet your liabilities that are also due in the short term? And you always want to see a 1-to-1 ratio here, because if you see anything less, anything less than a 1, that means that fund has more liabilities that are due in the short term at June 30 than you have assets on hand. And you know, business side activities as a whole is a 3. Your electric fund is a 5. Solid waste, probably not a surprise, is about a 0.04. So you know, that's but that you can see that's not a large difference. And I think part of that's probably because I think there's a larger interfund borrowing this year that is short term. So. And then the last table I always like to discuss, but does not have any surprises for the town, is on page 10. The pure nature of your business type activities, your solid waste and your electric, is that they're supposed to be self-sustaining, meaning you charge your citizens enough fees to cover the expenses to help them operate. As we've seen each year, your electric fund does cover with a little bit of excess. Each year you'll see your ratio is over 100%. As expected, as we've seen over the years, your solid waste fund is less than 100. I mean, it's not self-sustaining. And of course, that went down this year because there's some increased costs with the landfill closure.
How many months did we have with that? Was it 6 months we had with that increase in rate on the solid waste fee? Was it, one?
I think it was around
Six.
6 or 7 months.
Okay.
That's what. Do that.
Yeah, and this, and yeah.
So nobody's going to jail.
Not today. So, any other questions or anything? That's all we had on the deliverables.
What is it?
They make any questions on the audit stuff?
10 minutes left at this point.
So, well, some of the things that we've been talking about a little bit, and I don't know if, you know, you all can help us with this. Obviously, later on tonight, we're going to probably talk about, you know, maybe some, a large debt increase potentially. So does Brown Edwards ever kind of go in and take, I guess, maybe a deeper dive and help us kind of look at our financials from an operational standpoint to help us maybe make some decisions on, I mean, can we really take on this debt? You know, can we be more efficient, you know, in the solid, how do we get our solid waste fund closer to break even? You know, are there costs that are in the general fund that kind of should be shared a little bit more with, say, the electric fund? Is that anything that Brown Edwards does? Or I know that would typically probably be like a separate type of engagement.
you know, it's we can analyze things all day. We are to maintain our independence, though. We don't want to be responsible for rate setting or pointing you any kind of direction towards that type of stuff. We can analyze financials all day, dig into things, but there are companies that's all they do. You know, I mean, I don't know. Davenport does that kind of stuff. There's organizations that do. We can dig out, get a couple, and send ideas and some names. I mean, we can analyze these all day, but there are companies that's like all they did.
Okay.
You know, and so sometimes it's we love doing more work for you. I mean, we love working with the town, but sometimes it's better to have because they would be able to say, well, they have the data on 100 solid waste funds,
Right.
Whereas we can maybe we have 25. You know, so they might have a better idea or some more data than we necessarily might. But I can get some ideas. I mean, we talk to these folks at VGFOA all the time, and we can send some names. And
I think the question pretty bluntly is, there's been discussion, what is our true electric cost?
yeah,
We got general fund stuff, and that's in that. What is our true cost?
because you're looking at because you don't have a separate finance department at electric, so you're obviously using some indirect allocation there. There are rate organizations and companies that analyze that. Yeah, and we just did that. I think it was like Town of Purcellville was asking us the same question. I said, "Oh, you know, is that allocation that we're doing right?" And I said, "Well, it's consistent. It's not causing wild swings from year to year. That's kind of stuff that we're concerned with, where it could be the evidence of manipulation to meet certain results." But we gave them some ideas, some organizations that will really drill down into that. And I mean, there's an organization I think called Maximus. They do indirect cost rates. They'll calculate it and say, I mean, for like City of Lynchburg, they'll say, here's your indirect cost rate, and they use that. So, but we can send a list of those names. No problem.
But they don't do it for free.
No.
No, they do not do it for
They will work.
free. So.
Yeah, like I said, it's not, you know, it's not being critical of any department. It's just, you know, what do we need to try to do to maximize every dollar where we need to spend it to kind of meet our priorities. And I mean, I think that's, you know, and so if we can shift things, you know, here to there, or, you know, and we want to make sure we're being fair. I mean, to everybody, you know, from a cost standpoint, from the solid waste, from the electric. I mean, what we're, you know, so I mean, I hope no one, you know, that's kind of, I mean, like I said, we got a lot of big things kind of coming up.
I agree.
And so, you know, and we're just gonna have to figure out how to sharpen the pencil as much as we can, I think, and that's gonna take, you know, staff's help, everybody's help, and if we need some third-party help to do that, you know, I think we should probably look into that maybe as a council and talk about that a little bit more. But anyway, anybody else got any kind of questions or comments kind of on that?
About that 3.4 million that we didn't spend last year, that we did lose. And now, question is, could we just committed that to projects, or did it have to be completely spent?
You didn't lose it, you just didn't spend it by the end of the year. So it's sitting there on your books, it's in your cash, so you didn't lose it.
And the reason we didn't spend anything towards it is it came in on June 30th. We didn't have time.
3 hours to spend.
We're working on it.
Yeah, I mean, it was nice if they had done it on July 1st, you know?
That's what's going to be on that gate.
Yeah. Any other questions for, thank you guys, appreciate y'all's hard work and everything, so, we'll go ahead and adjourn the work session for a few minutes, and then we'll come back, regular session. All right?
for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Well, everybody, first thing on the agenda is the approval of minutes from our October 26th meeting. Any corrections or not, we'll approve those as submitted. Report of the town manager, Mr. Warner.
Thank you, Mayor Black, members of council. It's with great pleasure that I would like to take this opportunity to introduce Mr. Jonathan Holmes to you. Jonathan is our new information technology professional. He has extensive public sector experience, has come to us most recently from Botetourt County, and has really hit the ground running since his first day on November 1st. So, Jonathan, this is council, this is Jonathan. Don't overwhelm each other.
Welcome.
And I do have a couple of administrative notes to pass along. Town offices will be closed on Thursday, November 11th in observance of the Veterans Day holiday. Also, I want to bring to your attention, at this time we have no items of business for consideration at our regular meeting scheduled for November 23rd. If that trend continues, we will likely ask Mayor Black to consider cancellation of that meeting. And that concludes my report, but I'll be happy to respond to any questions, Jack.
Anybody got any questions from Mr. Warner? All right, any appearances before council tonight? No? Council comments? Mr. Stanley, starting in your end.
Okay.
Sean?
All I have to say, coming out of the last year of the COVID, I want to just thank all our employees for the hard work that they give us throughout the year. If it weren't for y'all, it would make us look good with what y'all do. And also, Mayor Black, when we get to revision agenda, I would like to add to the agenda crystal bonuses, if we can talk about it at the end of the meeting, if you don't mind.
Steve?
Unfortunately, this will be, fortunately or unfortunately, maybe my last meeting.
Bruce?
Okay, I got a few things to say. First, I want to congratulate Glenn Youngkin, Winston Sears, and Jason Mears who won their elections. I'll also congratulate Terry Austin, Kathy Byron, Wendell Walker, Matt Holbrook, and Dwayne Nelms who won their elections. I also want to welcome Jonathan as our new IT director. And I also want to say to Steve Rush, thank you for your years of service on this council. We may not have always agreed on everything, but one thing we can all say about Steve is Steve would say it like it was. He'd give his honest opinion, whether you liked it or not. He could be blunt, but you know what? That's what we needed, and that's going to be something that I'm going to miss from Steve, from him serving on council. And when he does, if he does step down and he does retire from the council, enjoy life, have fun, travel, you've earned it, and live a good life. Thank you for everything you've done for us all here. Thank you.
And Steve, we'll be having another meeting at some point to really roast you, so I didn't come prepared tonight.
We're not going to do
that. But anyway, so revisions to the agenda. Stacy has asked us to add a new business to discuss Christmas bonuses. All right. So, first item on the agenda is the presentation of the fiscal year 2021 audit report from Brown Edwards and Company.
Good evening. I'm Julie Moore from Brown Edwards. We met like the last hour and went over the financials in detail. The biggest recap is that you got a clean opinion on the audit, and we didn't have any issues. And we've been doing this audit, I know, for over 12 years, and we really appreciate you guys allowing us the opportunity. And we'd really like to give your staff kudos because they work really hard every year helping us. When we ask for something, they jump on the spot and get it for us. And as Chris had mentioned in the last meeting, that this is a 6-month process, so it takes a long time to get this done. And they never get angry with us, which is shocking. And they're really probably my favorite client ever. So.
That's good.
I'm cutting the check tomorrow.
Well, we appreciate it. Anybody have any further questions?
Appreciate it.
Thank you. All right, next, we have a action item, Bart, for resolution to cancel the second meeting in December, which is around Christmas time, so.
Yeah, we traditionally cancel the second meeting, which falls during the holiday season, and tonight we prepared a resolution for your consideration that would cancel the second council meeting, which is scheduled for December 28th, 2021.
All right, we have a motion to.
I'll make a motion to request to adopt the resolution of council in the second council meeting to December the 28th, 2021.
All right, need a second?
Second.
Roll call.
Mr. Haley?
Aye.
Mr. Hartwick?
Aye.
Mr. Johannesson?
Aye.
Mr. Rush?
Aye.
Mr. Schoen?
Aye.
Mr. Stanley?
Aye.
Mayor Black?
Aye.
Motion carries with 7 ayes.
All right, the next item, well, it's what everybody's been waiting for, is the presentation from Wiley and Wilson on our law enforcement building, parking garage, and farmers market.
We need to go there.
So, yeah, it'd probably be best, they've got a PowerPoint presentation, if we move down here for a room soon.
I need a couple lights.
All right. Good afternoon or good evening, everyone. Can you hear me okay? I'm going to use the microphone. My name's Randy Vaughn. I'm project manager and architect for Wiley Wilson, and I'll be making part of the presentation tonight. And with me, I've got John Good. John is principal with Desmond Associates, who's the parking side of the study. So this is kind of the agenda that we want to go through tonight. We're going to go through the parking study first, then we'll go into the police department component of it, and then we'll touch on the farmers market development, concept development, and then if there are additional questions, we can certainly answer them, or if you have them as we go along, please ask them as we go along. So I'm going to turn it over to John.
Okay, thanks a lot, Randy. Before I get into everything, I would like to thank Gary and Mary for their help to us in conducting the parking study that we've gone through. Their assistance was absolutely invaluable. So you got good people here. Thank you. So in terms of the demand assessment itself, really there's 3 phases of the overall parking assessment that we undertook. The first being the parking demand assessment, the second being the feasibility of developing parking on the Depot Street lot, and the third is the financial feasibility of such an undertaking. So in terms of the parking demand assessment, we looked at the overall parking inventory within the town. We observed how much of that actual available supply was occupied. We were here on a peak day in May. We saw that about 60% of the available supply actually had parked cars in it. We all understand in the industry that we're still kind of recovering from the pandemic. And so the term that we use is stabilized. We believe that once conditions stabilize, the actual occupancy in Bedford is going to be closer to 70% than currently observed 60%. And we use those figures in computing the rest of our work. So in terms of actually what we observed, as I mentioned earlier, 1,245 parking spaces in the downtown area. The large wedge, the red wedge indicates that about a little more than half of the spaces are in the hands of the private sector and the spaces are being used for private uses, which is not at all unusual for a community like this. A typical example is the bank with the surface lot behind the bank. That bank, the surface lot is providing parking, but the users are solely going to the bank, and the bank owns that particular area of parking. So what we identified is we identified the overall study area, and we took a look with the actual occupancy in those various plots within the study area, as I mentioned. And then we overlaid what we call emerging developments. And that, in this case, is very simply backfill of vacancies within the town, looking at things like increased residential, potential commercial development, and restaurant type development. So what we found is we found some shortfalls in 4 blocks, and they're up there in red. And you'll notice that blocks 4 and 5 is the courthouse area, the town-owned area, the focus of what we're thinking about developing as part of this project. So in terms of the overall community and the overall parking demand side, that's kind of where we see existing conditions. Are there any questions on the parking demand before I move into the accessibility? In terms of the site feasibility itself, the first thing we have to ask ourselves is how big a facility do we want to contemplate building? And for this exercise, the math exercise was simply how many spaces are in the existing Depot Street lot. On the adjacent Plunkett Street lot, how many spaces are going to be used up by the proposed police building? The parking shortfall of 3 of the 4 blocks that we just talked about, the new parking demand related to the law enforcement building, and then pulling out the how much on-site parking would be provided by the law enforcement property development itself, and then adjusted. So round numbers, we're looking at developing about a 150 space facility on the Depot Street lot. The nice thing about the Depot Street lot is that a lot of the site grading has already been done in terms of there's the retaining wall that's constructed along Depot Street opposite the courthouse, and the area is relatively flattened out. So there's a certain amount of savings in terms of reutilizing that infrastructure. The downside to the Depot Street lot is that we'd like to see lengths for parking development of around 250 to 300 feet. And at the Depot Street lot, because of the overhead power lines that feed the substation, we're a bit restricted in that length. So in terms of development of parking on the site, it's going to be a little more vertical than perhaps it might be in some other locations. So we're assuming 150 spaces, like I mentioned, and we're assuming that we're going to build a quality parking structure. And what I mean by that is twofold. Point number 1 is that the exterior would be sympathetic to the downtown environment that it sits in. It's not going to be some big gray box. The second point is that we would design the interior of the facility with the amount of durability that's needed for a facility that's going to be exposed to 12 months of weather. And we want to design into the durability into that facility so that you're not seeing premature repair costs for the garage itself. And then the other point on the project characteristics is that with the site being where it is, with maybe some unknowns, is you probably want to design into the facility a little bit of characteristics for future expansion. And that future expansion comes in 2 potential components. One component is potential for extending the towers vertically with some overhead connectivity to the courthouse. And then secondly, the simple of expanding the garage by continuing the ramping system, building more parking should we rise. So taking all of that into account with creating a segregated lower level and with everything else that we just talked about, we can meet the 150 space goal with a facility that's about 1 1/2 levels up above the existing surface lot. So basically the surface lot would be reconstructed. The Plunkett Street extension that goes to the substation would get rerouted a little bit and reconstructed, and the new parking deck would be constructed over top of that. There is enough headroom to allow service vehicles to get through underneath the intermediate bay of the parking garage, extending Plunkett Street to get to the substation. And the overall estimated cost to do 150 spaces is $3.75 million, rounded to 3.8. That works out to be about $25,000 per space, which is greater than what we're seeing elsewhere in the marketplace right now. But taking into account the relatively small nature of the facility that we're contemplating, and taking into account some unknowns as far as material prices, we think that the $25,000 a space, $3.8 million, is appropriate for what we know at this point. And that's construction dollars. All the soft costs and all the procurement costs would be above and beyond that.
So on the site there, so to come into the ramp, are you coming in off Depot, or are you coming in off Court, or how's that going to flow from a little bit?
Good question. Good question. And I don't. Okay. Well, this is not. I'm going to point and wave and gesticulate. There's a couple of different access points is the answer to your question. The Plunkett Street lot is the surface lot that forms the first layer, the first level, is not going to be part of the circulation system of the garage. Today, you come in and out of that surface lot off of Court Street, and that will continue. The upper level of the garage, you can come in and out of Court Street, and then you'll basically ramp up this lower bay that's closer to the screen, and then ramp around to the other side and go upstairs. What we would recommend doing in such an arrangement to alleviate some potential customer frustration with going in one entrance, not finding any parking, having to go back out to the street and go to the other level to find parking, is doing a rudimentary parking guidance system, which would advise a customer how many spaces are available on each level.
What's the access to the courthouse on this?
Let's see here. The courthouse in this isometric diagram is to the left of the screen. So the tower that's in the upper left-hand corner would be the primary pedestrian destination point for somebody going to the courthouse.
It's just crossing the street like it is now.
Correct.
There's a bridge.
That's correct.
Is this paid spots? Are these going to be paid spots?
That is the assumption. And that is a great introduction to the financial feasibility piece of the presentation. Yes, ma'am.
When you say vertical pedestrian towers, you're talking stairs, right?
Stairs and elevator.
Stairs and elevator, okay.
Yeah. We like all buildings, parking structures need to meet all the requirements of the state and federal accessibility codes, and that pretty much leads me to installing elevators.
Is the top level going to be covered?
Under this cost estimate and with this with the diagram that you see there, it's open parking on top, so no, it's not covered.
3 levels and all?
More like 2.5, but yeah.
The elevator will come out of the depot street. this out?
Under this scenario, yes.
And how many spots total? 150?
150, yes.
There's currently 44 there now. So
That's correct. There's 44 there now. There's about 20, 21 that can work their way into that gravel lot that's on the other side of 4th Street. And there's another 10 that the police department uses when it visits the courthouse that are right along Depot Street. That those would be relocated as well. So when you run the math on the $3.8 million, I don't know what rates and what terms that you're currently experiencing. We ran the numbers based on an APR of 2.75% and a 25-year note. And at $3.8 million, that's a debt service of about $250,000 a year, a little bit more. And the truth of the matter is that this parking facility, with the revenues that it generates, is not going to cover that level of debt service, and that's okay. It's very unusual on a national basis for almost any parking facility to be self-sustaining in terms of its revenues. Most of the parking facilities that are built in Virginia today are built within what's called a parking system, and a lot of parking systems, as you look at the entire system, the revenues from that can pay for new construction. Not always, but they can. Yes.
But I don't remember. To do this, you'd have to pay parking for the town in order to.
The assumption that we made on the revenue projections that we did, well, we ran a couple of different revenue tables, and the answer to your question is yes. The revenues that we ran was based on the assumption that both on-street and off-street parking would have fees associated with it. Of your 6 sister communities that we looked at in the comparison study, we looked at Roanoke, we looked at Lynchburg, we looked at Charlottesville, we looked at Blacksburg, we looked at Stanton, and we looked at Beckley. Of those municipalities, only Charlottesville and Lynchburg do not charge for on-street parking. And in each of those communities, what's the term of the phrase? Each of these communities has episodically tried to reintroduce paid on-street parking over the past few years, and for a variety of reasons, currently they're not charging for on-street parking in those communities, but the other communities are.
So what kind of occupancy are you predicting to meet this pro forma? Is it at the 60%, 70%?
Yeah, basically, what we assumed within the pro forma was that you built the parking facility for the need, and that gradually the demand would gradually increase over the life of the parking facility as things occurred in the town. So when you look at the tables of the pro forma itself, you see that revenues are increasing over the 10-year life, and that's for 2 reasons. The first reason is the increased demand that I just talked about, and the second reason is for the inflationary adjustments that we would recommend you make on about a 4-year basis as things move along.
This doesn't take into account enforcement of the parking.
The pro forma does. The pro forma includes staffing costs related to enforcing the on- and off-street facility, plus a full-time equivalent personnel cost related to a clerking activity, which will be things like issuing running permits to potential customers and doing other public awareness things. So looking at the actual, we talked about the rate program. One thing that I would say is that we do recommend price having pay parking on the streets. We also recommend a graduated pricing program. And what I mean by that is that the areas where there's the largest demand for the parking, which is along Main Street, right in front of the courthouse, those meters should be set at a little bit higher rates than meters that are a little bit further away from the downtown. And that's what we're talking about in terms of the low-range meters, the mid-range meters, and the high-range meters. There's no reason why you should not demand price on your resource, which is parking.
So on the 3.8 million projected cost, does that include the infrastructure for metered parking, everything, or is that just the 3.8 million?
The 3.8 is the construction for the garage itself. In terms of the cost of the meters and in terms of the other things for the on-street, I saw that figure and a couple slides. Pro forma. Well, yeah. What I don't have is that table. That's the parking system itself. And what I'm looking for is I'm looking for the actual upfront money for that.
So that debt service is based on just the 3.8?
Well, no, the debt service for the garage is based on the 3.8. The debt service for the whole system includes the 3.8 plus the staffing costs.
All right.
Plus about so yeah, what we looked at for the on-street was about 21 multi-space meters, a license plate recognition unit, some handhold enforcement units, and some new signage. And we estimate the total of that to be around $200,000. The costs don't go down, do they?
Well, that's part of the town, nobody thinks it's
and that is exactly what we see in municipality after municipality. Going back to the whole demand-based pricing discussion that I had a couple of minutes ago. And every time that we work in, and we do work nationally, there's no question that the on-street spaces are more valuable than the off-street spaces. And so there's no reason why they shouldn't be priced accordingly. And from a public goods standpoint, you want to have more turnover with your on-street spaces because that is where your vibrancy of your visitors are at. And unfortunately, the way you encourage turnover in the parking business is you hit people in the pocketbook. So you demand price people into where you want them, which is in off-street spaces in the garages, by giving them the financial carrot to do so.
and make it cost prohibitive to park that hours and not their business.
Well, that's exactly the point. And there's a town up US 29 that's having this very heartfelt discussion right now. So at the end of the day, as far as kind of figures and facts and things, the garage from the anticipated revenues can cover its operating expenses in terms of a maintenance reserve, in terms of personnel needed to keep the garage neat and cleaned up, and in terms of pay for facility bills associated with the garage. Those revenues we think started around $75,000 and increased to about $150,000 annually over the 10-year projection of the pro forma. So you need to compare that against what the debt service obligation is. And as I mentioned earlier, It's not at all unusual for a community like this to be operating a parking system at a loss to promote other economic engines that are in the town, to promote other building programs in the town. We can look at allaying that loss through a potential tax incremental financial district or an ad valorem tax or maybe some other financial things, but for right now, that's kind of where things stand on parking. So that's the end of the parking presentation.
And I think Tim asked this, but these revenues are based on the occupancy.
Yes. Yeah. What we did is we took our occupancy percentages today and we started to extrapolate them into the future under the assumption that some development would be occurring as things move along in the future. It does not assume that the garage is full from day one and it's bursting at the seams from there on after.
And you said that was based on a 25-year.
Yeah, that's correct. That's correct. And certainly if your geo bond or other percentages are a little bit different than what we assumed, and your terms are a little bit different than what we assumed, we can certainly revisit the model.
What's the life expectancy of a life like this?
I'm going to retire in about 10 years.
That'll be more than 10 years.
No question about it. No, we are seeing garages in Virginia lasting 50, 60 years. Having said that, you need to plan for doing a certain amount of maintenance repairs on about a 7 to 10 year basis, so that you can keep pushing out so you can keep increasing your life expectancy, so that when the inevitable repairs to the garage happen, it's not as big of a hit to the pocketbook as it could be.
Was that number figured into this maintenance?
Yes.
Okay.
Yeah. That is in the garage pro forma. That is there's a line item for repairs and maintenance. It starts out at around $16,000, and obviously you're not going to repair anything in year one. It's a sinking fee, so that when you do need to repair something, you have the funds available so you can. Shall we talk about Fiscal? Okay.
Any other questions on parking?
Okay. Well, thank you very much.
Thank you.
Thank you. This is good.
My OCD is
No, that's fine. That's fine. Let's see here.
There's two young ladies in the back.
No, oh,
What was that?
there you go. Okay, thanks, John, for that presentation, and we'll start into the police department segment here, and kind of go through what our methodology was, and give you some of the statistics and the findings, and we'll talk about those. So we start off with a needs assessment, and this is where we come in, we walk the space over, we prepared questionnaires and developed questionnaires and came in and interviewed the staff as well as the building committee as a whole, and came up with a projected size of a building here, which what we are projecting is about 20,000 square feet of space. And what you've got now in the building is about 4,000 square feet of space in this building. So that's a substantial increase. A lot of that comes through just, if you've been and visited our folks downstairs, they're literally sitting on top of one another. So it's not only providing additional space for them for what they need now, but they're woefully short in things like evidence storage space, those types of things. And then there are also some things that are included in this space needs that are not currently, that currently don't even exist. Such things as the vehicle processing bay for evidence processing of the vehicles to be picked up on the street somewhere. There's also fitness rooms and locker rooms for the staff, which don't really exist now to any extent. And then there's also a multi-purpose room which will serve lots of functions. One of its primary functions is one that will very rarely be used, and that's for an emergency operations center. So you don't really have one of those in the town right now. But as we know, those are only used in national or federal or natural emergencies. So most of the time that space will be used for other functions. We've got it situated in the building here, we'll show you just a second, where that can be used for a public meeting room for anyone in town. And then it can also be used by the sheriff's office for keeping the police department for roll call and those types of training sessions. So it really is a true multi-purpose space which doesn't exist now. So are there any questions about the space projections or size? Okay.
Randy,
Yes.
And it came up in that question. When you say we envisioned about 12,000 square feet, it ended up being 20. Can you explain that difference because of walls?
Well, there is program space, which is about, it's hard to read here, but it's a little over 12,000 square feet. On top of that, you've got circulation space, which is hallways, corridors, and which you need to get from one space to another. And then there is an efficiency, what we call a building efficiency number, which accounts for restrooms, mechanical rooms, structure, and that type of thing. So by the time you provide the room sizes and the spaces that you need, you put all of these other items on it, we end up at about 20,000 square feet of space. Yeah, okay. All right. Along with it, we did some what we call due diligence for the property. We performed a site survey, topographic survey of the property, so we would understand, how the land lays, where the utilities are on the structure. And what you're seeing here on the left-hand side is the parking deck, or the parking pit, we call it, there behind the courthouse, up to the railroad tracks across the top, kind of run diagonally. And then the site in the middle here is the Pluckett Street site, and the gravel lot, and then there's a concrete pad there that was some kind of old garage building or something that was there prior to this. So we, along with the site survey, we also had a preliminary geotechnical survey, which is doing soil borings to make sure that there are no problems with supporting the building structure there. So we have 2 borings, 2 done in the garage area and 2 done for the site, police building site there, and that came back that the soils were in pretty good bearing capacity, so no surprises there. But again, that's good information that a design build team will want to have as they move forward in preparing a proposal for us in the future. And then we also had the town, or the water authority, run a hydrant test for us for fire protection purposes, for sprinkler system. In a building like this, you really want to have a sprinkler system in it. We wanted to make sure that there was sufficient flow and pressure in the water system to provide that the service to this size of a building. And that came back positive that they do have good water and pressure, so that keeps us from having to spend money on a fire pump or something like that. It can be a pretty expensive item. So this is the site, that site plan as we have currently envisioned it. It's still very conceptual, but it does show both the parking structure here, as John was describing it, is the gray box on the left-hand side of the screen. In the middle is the new police building there that we'll talk about a little bit more. On the next slide, we were able, this is a pretty tight site. You know, you've got about a 40,000 square foot site, we're putting a 20,000 square foot building on it. So we're looking at a two-story building here, which then allowed us to still provide some on-site parking, some surface parking, which would be secure parking there. So just to the right of the building footprint. There's about 19 spaces there that would be controlled parking for the police cruisers, apparatus, their equipment. Then it's kind of hard to see there, but to the right of that is the street that comes up the hill here into the back of the parking lot to Town Hall here. There's already some parking that exists there that the social services group is using currently. We would propose dedicating that parking to our police department, as well as doing some head-end parking right off of that street if you come up the hill and put some parking there. So we've got somewhere around 47 spots between those three locations, and then perhaps across the Pluckett Street there, we've shown 5 visitor parking that may or may not be there depending on whether the parking structure goes ahead or what happens there. But we didn't want to have some visitor parking for the that is separate from the rest of the parking on the site. Also, across the top there, the green kind of indicates the edge of the where the railroad runs. Sort of in the early discussions that we had with you all and the RFP, you had talked about the farmers market or potentially having the farmers market located up there. In this scenario, we have chosen to not have the farmers market there, and we'll talk about that a little bit more later as well. But what that does is provide, you kind of see that looks like an exclamation point laying on the side there. That would be your stormwater management for both this building and the parking structure. So we've run the preliminary numbers on that and found that that's a sufficient area to handle the stormwater requirements, which that would be more of what we call bioretention. So it's not a pond, it's more of an area where the water can temporarily set. There's plants there to help treat the stormwater. So it's more about stormwater quality now than it is about the capacity of holding water there and having them. So you're not going to have a pond there, is the main point here. So this is the conceptual layout for the building. It is, as I said, 2 stories, 2 floors. The lower floor here on the left-hand side of the screen And this is oriented, so it's very similar to the way the site plan was just oriented. So Plunkett Street is across the top of the page here where it says Police Department. And so you would have a public entrance here, this lobby space, right off of the street level, walks right straight in. Within that, you've got some public restrooms, and then you see on the top right-hand corner is that public meeting or multi-purpose room that is accessible directly from the lobby, but yet is also accessible from the rest of the building. But the wall that goes across there and the door is what we call a secure perimeter, so the public cannot get any further than into the lobby to the restrooms. There's a small conference room right off the lobby that can be used for private conversations that anyone wanted to come in and have, and then the public meeting room off to the right there, which would also be where we have that emergency operations center, so that would have backup power to that room, heating, cooling, running off of a generator. Other functions down on this floor, we've got that vehicle processing bay, we've got evidence storage here in the bottom left-hand corner, all the records, all the things that are heavy, we try to keep on the bottom floor where they're sitting right on the ground. And then up on the upper floor is really office space, a large control room up there on the right-hand corner. Coming down below that are the locker shower rooms and fitness room, and then just staff offices to the right, and a conference room. So that's all that, as I said, is about 10,000 square feet per floor for about right at 20,000 square feet space. So any questions or, okay. So this is a preliminary of what it might look like, could look like. A couple of things that we're considering is, since this is sitting sort of down the hill, you're going to be looking at it from, so you're going to be seeing the roof of this thing a lot from up on top of the hill here. So we didn't want to go with just a flat roof. We wanted to articulate the roof a little bit and break it up, but we don't want it to get too carried away. So this is one potential solution that we are demonstrating here with you today. The rest of the material would be brick block, a metal roof, and then perhaps a metal panel, insulated metal panel on the top there. The windows are intended to kind of pick up on the some of the old industrial buildings that are around town, but yet the central entrance there, which you see there in the middle of the upper, would be more of a glass, open, inviting, and be daylit from above, so it could really give a nice feeling of welcome into the police department. And these are, again, some renderings of what that might look like, sort of showing it from that front. You kind of see the scale of the courthouse and town hall there behind it, just to kind of help you get a feel for how this would fit in. As you come down the hill, the building will be sort of built in to the bank, so from the upper side, you're really only going to be seeing about the top floor and a half of the building, and as I said, you'll be seeing the articulation of the roof from above. And so this is the numbers that we've run for a budget. I don't like to give just a hard number budget at this very perceptual level, so we go from a low and a high range here. You kind of zero in on this as we go. We're looking at the sort of the low side for the building, we're around $350 a square foot. For the high side, we feel like $400 a square foot. That's based on some recent projects that we've done, and public safety projects that we've done. We've escalated that up for current cost, and then knowing that this is going to be almost a year out at the earliest before we take proposals or take bids from contractors on it. And we put in site work cost here, come up with a building cost. Since this would be a design build proposal, we've had included the architectural engineering fees into that number, and then we put a 10% contingency in there. So that gives us to a proposed cost of around 9.2 to 10.7 million for that design build proposal. There would be some other costs that we have identified, what we call the soft cost, which would be the AE project management fee, which would be if you guys decide to continue on the current path to retain us to help you administer this project through, and that would be all sorts of scope items that we can talk about there to control what that number is. We just don't want to put some money in there, furniture, fixtures, and equipment. You've got a 20,000 square foot building, and have to put some money into furnishing it, and equipment, computers, networks, those types of things. And then there's maybe some other soft costs of alternative heating or some of the other type of things that are yet to be specified, which those come up to somewhere around somewhere between $400,000 to $800,000 potentially of cost to add into the overall project cost. So I'll stop there for a moment if there are any questions about any of this.
We working on this, I think we try to keep it to functional.
Yeah.
Let me see, any re-engineering that can be done, we can help reduce some of that notably.
Well, obviously the size of the building is the first place you would go. So if you want to make the building smaller, then that could be done, but that sort of defeat the purpose of it. And I don't have to tell you guys, probably already, if you've gone to Lowe's and tried to buy 2x4 in the last year, the prices of materials have just gone outrageous. This building, when we started talking about it, I was thinking it's more around $300 a square foot building, and we're at $350, $400. So that hasn't escalated as much as I had thought originally, but still it is. I don't think we've seen the prices settle down yet. Hopefully by next summer, I see some of the audience shaking their head back there, but it's just really very difficult right now to price construction.
And I will speak to you, but in that discussions, this thing is planned for growth.
Right. Yes.
50 years down the road, if the police department goes and whatever may happen.
Right, yeah. This has got 20 to 25 years of growth expectation in it. If you wanted to cut out that multi-purpose room, I guess you could do that, but then you really cut out part of your program and your need. I don't really know where you would go other than that. We tried to build a little bit of growth into it, but we try to be very mindful of that, because we understand that there's not an endless source of money to pay for these types of facilities.
And you got remarks when we were talking?
No,
I really push for that open vestibule because we need people to get light into the public. And that's, you know.
I mean, obviously, and there's a lot of things in here that the police department doesn't have, but, I mean, you know, they really need. I mean, evidence storage was a huge discussion. You know, locker rooms, I mean, you know, they don't, I mean, what they got downstairs right now is, I mean, woefully inadequate. So, I mean, there are some things in there that probably made this size of this building increase a little bit that, you know, in my original mindset, probably I wasn't thinking about, but, you know, it's a lot of money. And, you know, I don't know if there's probably no way to build this. I mean, there's nothing really in there that you can't build out. I mean,
Right.
I mean, locker room. I mean, not a locker room, but the fitness center, or the. I mean, it really there's no way to phase this building in the way we've got it kind of structured with certain functions on each floor. Kind of. I mean, I was hoping it might be, but.
And it's cheaper to build as a whole than it is to add.
Right.
I mean, yeah. I mean, who knows what the prediction is for
Right.
supplies and labor market. I mean, yeah.
I can tell you, I just experienced a little contract for some holding cells in Louisa County that they went slightly past the 60-day hold on bid, and the contractor came back and said, I've got material increases of over $100,000 on a $1 million project, so $1.6 million project. So,
I mean, that's basically going to drive demand down.
that's going to drive demand down.
Now, will the supply catch up with it?
I mean, sooner or later, supply will catch back up, right? So, you know, if we have to delay the construction of this thing, that might be a decision you have to make, yes, sir.
Okay, something that some people may be wondering is how, once we do start building the police station, how long is that going to usually take to build it?
Yeah, I would say a project like this would be somewhere, just construction cost or construction time, you're looking at 18 months to 2 years, 18, 24 months. This would also have some design time in it, and I would think you're probably looking at 3, 4, maybe even as much as 6 months of design time.
So what about, so design time plus the bid process?
Right.
What are you thinking there? 9 months to 12 months out? I mean.
Well, you know, I know you guys all work on, you know, fiscal years starting July, right? So assuming that you would have that money available to go out to do the proposal in July, then, you know, between now and July, we would work towards getting that RFP pulled together and have all the documents ready. And should you decide to move ahead with the project. So I think that's something you guys have got to decide is, you know, where we're going to move ahead. Are you going to move ahead with this? And when do you want to do it? And when would the money be available to do that? Because, you know, I would think you could take polls on the design build a few months before the money was available, but I don't know if you want to do it in March if you know, the money's not going to be there till July. Yes, sir.
I have a question. I know y'all like to do architectural designs and stuff. On the roof part, do you like to do more of the architectural design or roof way things are with the water flows and stuff, or more flat roof?
Well, I have every municipal client tell me they don't want flat roofs. So.
Okay, I'll just like.
So right now, this is envisioned with a metal standing seam room, so it's roofed, so there wouldn't be any. We don't call them we call them low slope roof in the business because there's no such thing as a flat roof anymore. But right now, this doesn't envision. But we did look at perhaps if we wanted to set some kind of equipment or need to set equipment on the roof, then there might be a small area of low slope or just for to set the equipment on so you can access it to get to work on it.
There's a flat roof on this one. That's
Yeah. He didn't like
Which will be
it.
processed.
We I mean, have what we need. I mean, we need the locker rooms with the showers for officers when they're exposed to blood or any other bodily fluids. We need somewhere for them to be able to clean up. We included the armory because currently we don't have an armory. We have a closet we basically store our weapons in and have nowhere safe for our officers to clean the weapons, because you really need a area that's ventilated for cleaning the weapons, so you're not just breathing the cleaning materials in. And then the other thing with the evidence room, as you said, it's really too small, and again, it's no ventilation in it. So what we have in it has caused employees to have allergic reactions when the door's been open too long because it's not ventilated. So there are challenges, because you can see we're at 4,000 square feet. We don't have a meeting room. We use what we can in the building, and we don't have it. If a person comes in to make a complaint to the police department, we don't have anywhere that's other than to bring them into the building. And sometimes that's not safe for our other civilian employees if it's somebody that could be violent for some reason. So we're bringing them in the building, and our police officer may have to leave for something, and there's somebody in the building with them. So we've got a lot of challenges down there, but I understand the cost, and I don't want to see us do something that's going to be harmful to the town because the cost is too high, but I also want to figure out a way to take care of our officers.
One desk is a stairwell.
Yeah, our complaint desk is a stairwell, exactly.
So, the design is envisioned, so you've got those security programs
Yes.
in place. The general public just can't walk in off the street and cause havoc.
You've got to have locker rooms, you've got males and females.
Yeah, so we have to have 2 locker rooms, and the showers have to be separate. And we did hear about the fitness center, which we would use for training also, but officers need a little somewhere to relieve some stress at times, because that's a problem nowadays. We have a lot of officers in the United States not handling their stress well and ended up dying from suicide. So we want to try to get what we can to help our officers relieve that stress without just taking it home with them. So that's the reason we thought about the fitness center. Plus, we need our officers to be in good physical condition if we're out dealing with issues on the streets.
Well, that can be used for counsel when they stress out.
Yes, yes.
Not that any of them.
So, but like I said, it's a challenge because I realize the cost is way more than I expected to. So I'm not unrealistic.
And, again, if I had a crystal ball, I could tell you that, one of those numbers is the right one. I feel confident that we can build this building for that budget.
In a year.
And right now, I feel, last year, who knows what will happen in a year's time.
So you feel like that 15% contingency on the high end is that what you're seeing in the market? Are you seeing, are you really seeing as people get closer to coming to bids that it's working out to be higher than that 15%?
Well, that really is, I always like to put that in there because that's really what I call a design contingency.
Okay.
So that's really things that you haven't thought about right now at this very preliminary level. So
that's not a market. That's
really not
that's
a
a
market.
project. So then back to my question then, because every project then should have a contingency in it.
Yes.
I get that. All right.
Mm-hmm.
So what are you experiencing out there when have you got enough evidence to say, all right now in today's market, I'm projecting this, but stuff's still coming in 10-20% higher because I knew these contractors, they don't know. They can't. They can't predict what their material prices are going to be, or when they're going to get it. So,
yeah, I don't think any of us have had. We're just a year into this thing,
right?
And every day you think, it's going to get better, it's going to get better, and hasn't yet. I mean, you got, sooner or later, it's got to catch up.
Right.
Supply's got to catch up with demand. That same project, the contractor told me I can't get isocyanate insulation right now. It's a year out, which is what 90% of buildings that are built today have that type of insulation on the roof system. So we've got to go to a different type of insulation that he can get his hands on. So those are the kinds of things that, you know, arduous, you know. Every Walmart you see, Lowe's, you know, the roof systems are arduous. They're just back over. You can't really get them. So hopefully by next summer or into next fall, those things are going to start going away. And it's got to. I mean, we've got a capability of production. We've got manufacturing that's going to sooner or later got to catch up with all of this. But right now, it's just really things are so backlogged and trying to get them. So it makes it very difficult to accurately predict costs.
Gary, we RFP, you want to do this, but were they supposed to also do the project management, or was that another RFP?
That would be separate.
Okay.
It would be continued,
So where we are right now with our study is to finish, to get any feedback from this group here. We want to make some course corrections or incorporate comments. We can do that. Then we will finish up the report, which will be a more detailed explanation of what's actually in the building. That would be the same for everything.
But we have to have a separate firm to do project management.
No, we talked about this would be phase one. Now, on your RFP, you also had asked that we could stay on and help you manage that process, that process, which we have not contracted for yet, because we said we don't know whether that's going to be a parking structure, a farmer's market, and a police department, or are we just going to build a parking structure or what? So we didn't really know yet. So.
And that's what they developed the
Everybody
RFP.
understand.
And that's-
There'll be a builder, but it'll be somebody watching.
Well, and they'll help develop the RFP.
Right.
And then you'll help kind of evaluate the bids as that.
Help evaluate the bids, and then what we talked about is we would stay engaged to act as sort of
Construction manager.
well, construction manager, but more monitoring to make sure that what you were getting through your design build team was what you had contracted for, or what the requirements are. So making sure they're fulfilling those requirements. We would stay engaged during the construction phase to kind of have eyes and ears on the project to, again, make sure that not to act as the architect of record, we would be stealing the drawings and so forth per se, but.
Is that A&E project
And that's what
management
that
fee?
project management fee is.
Okay, all right, so it's not a fee added in there.
So, yeah, that's, again, that can vary depending on primarily during the construction phase, how long that construction phase is going to go, and what do you want our involvement to be? Do you want us to be there once a week, once a month, once a day, you know, so that's why that number is still there.
I want to bring it up so everybody else will understand it.
Yeah, no, that's perfectly fine.
Anybody got any other questions?
Art, get your boot, stand in front of it. Go boot.
Give till it hurts, everybody.
Well, thank you all for all your work and effort.
So we do have a couple of
That's right,
points
we have
about
four.
Go ahead, forward, man.
Yeah, sorry.
that we wanted to kind of bring up. As we kind of got into this, there didn't seem to be a lot of sentiment for moving the farmer's market from where it is currently. The idea was that perhaps it would go down there across Bucket Street as a possible location, and so there just didn't seem to be much momentum behind that concept, so we didn't really pursue that. However, we would think that there's some improvements that you could do to the farmer's market that you've got now. things like, tensile structures that we can put up to be web blocks, reworking the restrooms, freshening them up, perhaps some new lighting, some new fans to get some ventilation, and then perhaps also introducing some of these type of, what's it called, parquets or parquet type of seating that could be put along the street side there that could really help make that space a little bit more than what it is right now. We're suggesting maybe you could even stain the brick to give it more of a, as you see over here in the lower right-hand side, the brick could be stained. All that could be done fairly economically, and I would think for, however much you want to spend on this, maybe, as little as $50,000, $75,000 to $200,000 or something to spruce this up would make it a much improved space there. So that's still something that can be more input from this group, or who really would like to say what they'd like to see there more. So that's really what I have to show to you tonight. Any questions about the farmer's market? Or?
So we haven't kind of put a budget together.
We really haven't put a number on this.
That's things we could typically probably build in over time. It just almost kind of operations budget.
I don't foresee that you'd want to put this in with design build. Like this could be something, could be a maintenance type of thing. I don't know if you've got internal forces or if you've got local contractors that could do these types of things, and a lot of that stuff could just be bought and placed there by your Parks and Rec folks.
Any other questions? Thank you all for all your efforts. We'll go back up here.
Ask to turn the lights on, make everybody else.
Leave it, we might need to leave it.
Thank you.
So, we've heard the presentation. Has anybody got any initial thoughts? I mean, obviously, this is a major project. Both of these are for the town. I don't know. Anybody's got any ideas where we want to try to go next, or what we want to try to discuss and try to start figuring out here?
Well, I guess at some point we'll have to do the number crunching just to see where we are and what direction we can go and what's out there.
I think we have to do it. It's just the cost was a bit of a punch in the gut.
Well, Tim and I were on that committee, and Todd, and I said I don't want to Taj Mahal. I think it's the basic, but it's what they need in police departments today. I mean, I've been in some modern police departments the last year, and but I'm built up with their. That's what you got to have for these guys.
Well, I mean, I looked at the sketch and all that. I thought it was very well laid out and sort of all the needs which they need. So we'll just kind of figure what direction to go.
Tanya, don't mean to put you on the spot, but have you been thinking about this number at all yet, or?
Well, we already have $2.5 million set back in restricted funds for the public safety building parking garage.
Where did we get $2.5 million?
It's in restricted funds.
And we identified it as that?
It's in capital improvement general fund restricted funds. It's reported out every month in your financial report.
Does it say public safety building? It says restricted funds.
It's restricted capital improvements.
Okay.
So it actually was a CD that we had, and it came due, and we decided to put it in a money market account in order to save that and not tie up those funds for the public safety building.
Okay. You said public safety, that's the reason because I didn't know they would identify it. Anyway, that's good.
That's a start.
Hey, Mike.
Sir.
You've been involved in some of these bonds.
Yes, sir.
Can you give us, can you shed any opinion on that?
I was just doing a little bit of quick arithmetic. That's why I wasn't just playing with my phone to, send funny pictures to my wife. I was actually doing arithmetic to figure that out. And yeah, it's probably going to cost you, it looks, just to do based upon what Sonia just said, I would guess somewhere in the low $330,000 to $350,000 in debt service a year, assuming it's a 25-year bond, which it could be 20, could be 30. I know that there are people who would buy that bond. You could probably issue it general obligation as a tax exempt. But beyond that, you really need a municipal financial advisor to give you an idea of where to go.
Yeah, I just did some looking last night, just Googling what a 30-year muni bond is, rate-wise right now. And, an A-rated muni bond was 2% yesterday. I mean, so, based on that, I mean, on the high end and soft cost all in, that was a $500,000 a year debt service, so now if you back out 2.5 million, we're still talking substantial amount of debt service, and so what does that mean from our overall operations standpoint? Where we're going to come up with that? Does time get us a little bit closer? We still got a few years before we can get out of some of that debt. I don't know. That's $500,000. That's 5% of our budget. So how much is that going to affect services elsewhere? Those are the things I'm thinking about. Believe me, when we were talking $6 million to build this building, I was all in. You come back at $11 million, I'm like, I got to scratch my head a little bit. I understand why, but at the same time, it's like, we got to be careful. And this is not the only, this is not, there's a lot of, there's other projects too. the parking garage, I don't, that's probably maybe on hold a little bit longer, but, there's the issue with the train station that may be coming at us, that may need some local funding. It's just a lot. Now we should work and try to figure out how we can do it, but we're going to need a lot of.
I think it's funny on that train station. 6 or 7 years ago, when they first started talking about it, they said it would cost us nothing.
Right. Well,
Price of nothing certainly has gone up.
the price of nothing's gone up. Yeah, exactly.
Nothing to something.
Okay, a few things. Obviously, this police station is going to cost us quite a bit, and obviously we are going to need to probably get some bids from contractors to see how much they would do it for. Your personal opinion, Mr. Lockaby, do you think we should wait until we retire our long-term debt obligations before we even look at this?
I honestly have no idea, sir. I really wish that I could give you that, but you really need a municipal financial advisor. Sonia might be able to make a guess as the finance director, but that's above my head. I'll draft the documents for whatever you want to do, Mr. Hartwick.
I just knew you had a lot of experience with some of this.
What's your first reaction, Sonia, as the finance director? Where do you think we should go as we try to figure out, can we afford this?
Well, I will say that your current revenues are matching your expenditures when we use prior year reserves. So if you add an additional debt service on there, now, we always spend less than what we budget, so we always come in to the good. So that doesn't mean we wouldn't do it in future fiscal years. However, you would need to up your prior year reserves to balance your budget, and town council has heartburn when you budget against your prior year reserves, even though we would probably bring more revenues in than what your expenditures came in at in a fiscal year.
But from a budget standpoint, you're gonna have to either budget more revenues or budget less expenses to kind of make up that.
Unless you
Make
want,
up that gap.
unless you want a budget fund balance. Now, the first $2.5 million I've already got set aside. So, that
So what
depends
is-
on what rate you get. It may be doable. But remember, currently with the number of real estate houses that you have, once in on the real estate tax is around $50,000. So, you've got to factor all of your revenue in.
200 of them would have been nice.
Yeah, 200, another $120,000.
So, there are a lot of moving parts, a lot of variables. We don't even know currently what they would quote the bond at, so as far as interest rate. That's a factor as well.
So, of the 4.7 million we just got in our audit today that says unrestricted in our general fund. So
And
that
part of
does
that
not
is-
include that 2.5
Part of
million.
that is, no, it does not, because
Okay.
I've got this in a restricted account for use of, we just didn't want to reinvest that money and then eventually have to pull it out again and face consequences as a result of it, because we wanted to keep that liquid so that we could use that on any type of building that we wanted to do.
At the next finance committee meeting, can you maybe come up with something for us?
Sure.
Just ideas, because this is,
Yeah, I mean,
right now, I'm not going to make a decision.
No.
Sure.
Some ideas, maybe some recommendations on who maybe we can talk to. I got all kinds, but this is a huge.
Even if we do need it
I mean, I want the towns.
If we need an outside financial advisor too, ideas, who, where, what.
There are a couple of options we can choose from, but what you want to do is, you would need to get quotes from them first, because you don't want to pick winners and losers, and you just don't want to pick one to get their advice, and then if they come in, their quote comes in higher, then not pick them.
See if you can reach out and kind of get a.
We have a couple that we can reach out to. Bart and I actually met with one of them a couple of weeks ago, and they're very interested in this project. They're not only financial advisors, they are also lenders. We have a couple of companies that we.
And VML will actually do it too. Do we need to do, well, first we just need to get a ballpark idea of what it's going to cost because that's another cost that we haven't funded yet, or it's not in our budget. If it's $5,000-$10,000, hey, to get some kind of credit analysis, but if it's $50,000, then, I don't know.
I could pay them professional service rate in order to just kind of get a ballpark analysis. And see, just to give you kind of some sense of what it would be. But we would still have to RFP their services out when it came down to it.
We would have to do a procurement, although the other thing to recognize is, depending on the situation, and this isn't necessarily a great idea, but this is typically how it works, is normally you don't pay their fee up front. You pay their fee comes out of the closing costs of the transaction. So, which can be good or bad depending on what you want to do, but that's a pretty typical way that the financial advisor does it.
I just think we need a third party kind of, plus the fact that we're getting ready to borrow $10 million, whatever, and the number end up, that we're not doing anything that's going to hurt the financial stability of the town.
Sonia's going to bring that to us.
Absolutely.
All right, anybody else got any other thoughts? Questions?
I'm sure they'll be coming.
I'll stay here and argue with you, but it ain't looking at it.
The next item is Councilman Haley with an item to discuss Christmas bonus.
Last several years, we gave bonuses to our employees. Last year, we gave them hazard pay because during the COVID thing that they worked pretty much through the whole thing, majority of it. You know, most times we would shoot for like maybe 200, 400, or 250, or 500, 200 or 250 for part-time employees, 500 or 400 for full-time employees. You know, our employees does an excellent job to help us keep our town going out because, you know, we might not have a November meeting and we won't have one more meeting in December. I would ask council to consider a bonus for the employees this year. I know we're looking at all this other stuff at the police station and stuff like that, but that won't really fall into next year or whatever, so.
Can you come up with this? We've got a pretty good salary lapse this year, haven't we?
We do. We have, I think about 10 vacancies right now. So we have some salary cuts built in.
My last thing, I'd be for it for everything department heads down, not department heads below.
What number?
It depends on the salary lapse.
I'm sorry, I don't have that.
Yeah, this is-
What have they been doing, 500 or?
Well, we gotta look, see if we got the money, is what I'm saying. See.
Right, okay.
In years prior to last year, you did a bonus of $500, but you also increased that amount to cover the taxes for the employee. So that came in around $780 per employee, something like that. So,
Is, can't call it bonuses, but was there a piece in the ARPA for like hazard pay or again or not?
Maybe for qualified first responders.
Yeah.
I don't think so in this round. I know in CARES there was, but I need to double check. I think if there is, it's limited to identified first responders.
Well, you know, I know, because I kind of feel bad for our police department when the General Assembly gives everybody else bonuses, but won't give us any money to, you know, to give them a bonus, you know, so shame on Richmond for that, but anyway.
Well, hopefully that'll change.
So, I mean, I would certainly support some type of bonus to all our employees, but I think we need to get a number and talk about it a little more and just instead of make something else.
I can have that figure at the, for the next meeting.
We'll have one more.
I mean, we'll certainly have one in 1st of December. I mean, we may need to try to have one in a couple weeks.
All payroll needs is the okay from me. And they will already have that calculated once council votes on it, and then we could have that out the same week.
I mean, I would be in favor, like Steve, giving them a bonus based on Sonia's recommendations.
And the big thing for me is I'm in favor of the bonuses as long as we've got the money and we don't have to raise taxes to do it.
Well, that's the salary lapse we're talking about.
Yeah.
Let's talk about salary lapse.
Do we need to make a motion, or do we need to?
I will bring you back figures at your next meeting. I will have payroll poised based on your decision to either pull the trigger on it or not. So we'll go from there.
So that does lead to the decision. I mean, do we need to have a meeting, the second meeting in November with that item? I mean, do you
No, I think we could get it done in the same week. It could be a Friday check if town council approves it on Tuesday. That's not a problem for our payroll staff. They're that efficient.
So Tuesday the 8th. I mean, when's that first meeting in December?
December 14th.
Oh, good gosh, that's.
Why don't you just have a meeting?
Yeah, I mean,
Why we plan on having a meeting in November, because we may be able to get a little bit of information on this a little bit, so let's, let's plan maybe to, and then, like I said, so we'll plan on meeting second Tuesday this month, and we can take up that, and take up a few other.
And make Steve come to another one.
that's true.
What did he say?
Make me come to another meeting.
I can't hear it.
I can come to next
Get
week.
here, Nathan. And then, if nothing else, then we're adjourned.
Should have gave him the deal.